It's the clarity of the negotiation. I've been doing it, and we've been doing it in Utah for the better part of probably the last 6 or 7 years, right? Yeah. So this doesn't change anything for Utah. But at this case, so now they're saying you need new written agreements. So now the buyer goes to a buyer agent, says, hey, will you help me find a house? Or I need you to help me buy a house. Because it's not just help me find a house. Most of the time they can find it themselves. I need you to help me buy the house. Once I find the house, what do I do next? Hey, everybody. Thanks for tuning into another episode of the 435 podcast. I'm your host, Robert Macfarlane, and I got Jazzy Jeff Watkins in the house today.
Yes, sir.
Wah, 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 wah. Hey, everybody. We talk about real estate in this episode. So if real estate in Southern Utah is not something that's interesting to you, then you can just click on another episode. But if you want to know how the market's faring in Southern Utah, this is the episode for you. And we talk about one other thing, the $418 million NAR settlement and how that is impacting real estate. The headline is, the NAR agrees to slash commissions, but that's not really the case. We dive into that, what it means for you as the consumer, buyers, sellers, real estate agents, the whole lot. We hope you enjoy this episode. Big shout out to our friends at FS Coffee Company in downtown St. George. They just opened their doors. Go to fscoffeecompany.com and type in the promo code ILOVEFS for 10% off your first order. Tell them the 435 guys sent you. Enjoy this episode, guys. We'll see you out there. Hey, Jeff, how's the market?
It's good.
This episode's going to be late. This episode's going to be a little laid back. Most people are used to getting right into talking about politics, but we're going to shift gears.
Well, I mean, the general rule of thumb, because that's the number one question you get asked as a real estate agent, right? Hey, how's the market?
Yeah.
There's 1,000 different ways to answer that question. Depends on the price point, honestly. You know what I mean? Like, if you're less than $400,000 and you're a first-time home buyer and you're looking for something with no HOA, good luck. The market's turning and burning. But if your budget's $1 million, you can kind of have your pick of the litter for the most part. So, but again, it all comes down to pricing. So the market's still, it's been strong. I mean, I was looking at some year-over-year data. Q1 last year was an utter disaster. So a lot of things have really improved, or, improved, I guess, how you're looking at it.
Yeah.
So
what do you mean by utter disaster Q1 last year?
Well, here's a good example. Active days on market is down 33% as a whole in Q1 year over year. Or in other words, nothing was selling in Q1 of 23. 24, things are moving.
Yeah. So on the median cumulative days on market, we got in 2024 43 days on market and 51 year to date. So we're picking up the pace. Median cumulative days on market. One thing I'll mention too, data. You can make data say anything that you want it to say, and so like. Thinking of when somebody says, like, and not to call you out here on an utter disaster, Q1 was a disaster if you were a real estate agent expecting to get paid in Q1 last year.
Yeah, I guess it depends on how you define disaster, right?
Yeah, it was there was just not a lot of homes selling. Total sales was so low, like historic lows. We're going back all the way to 2014. Last year, 2023 was basically the lowest number of real estate transactions since 2014.
Year over year, it's 50%. So just as far as numbers go, last year, 56,292,000 in total volume. This year, 84 million in total volume.
Yeah.
50% increase.
Yeah, and that's huge. And looking at, and this is another thing when you look at stats, right? Volume versus total number of homes sold. Most people, right? They look around and they're like, man, we're building a lot of homes. There's construction. People are building everywhere. Yet last year, on the number of actual sales, the actual completed transactions, and this is just looking at the title reports and the county recordings, right? This isn't just MLS data. Because if you look at MLS data, it's a subset of the market.
Yeah,
it's
because
resales.
There's off-market stuff.
Tons of
yeah.
new construction that is not recorded on the MLS, right? And so if you're talking to a real estate agent, you have MLS data. If you're looking directly at the county recorder, which not very many sites are going to cite that, you're going to look at it and see a completely different number. There's about 25 to 30%. Let's call it on the high end, 30% of the market is not going to get recorded on residential sales. But that's in a year that real estate's booming, right? So if we were to say 21 and 22, that was probably the case for off-market deals.
Or in other words, if you had 100 home sales, 30 of them were going to be off-market.
Right, exactly.
Not
on the high end. And then on the low end, 20%, let's say 20 to 25%. So there's going to be a subset of the market that just isn't recorded. So when you're looking at data, it's always going to show something different. So, if I'm looking at, if I'm a buyer in Washington County, I'm going to be either a first-time home buyer, moving here from somewhere else, you have money, and you're shopping. Maybe it's your second home, maybe it's your third home, right? In the course of time, and or you're retiring here, right? Which might be your fifth home, right? So those are basically the buyers in our market. First-time home buyers, the Gen X has money, moving up buyers, but they're coming here from out of an area.
Yeah.
And then, or the early retirees. Those are the three buyers for the market. Now, if you're selling, you're forced to sell, and then that's about it. Like, truthfully. Yeah. And the main reason, and I'm going to cover this here in a minute, and then stay tuned, because if we haven't captured your attention yet, stay tuned. We're going to talk about the NAR settlement and what that means for real estate, because I have been getting this question nonstop since the settlement hit. We're actually a news cycle out of the scenario. I think the dust has settled a little bit for a lot of the inflammatory things that were said, but we're going to start to see, okay, how is this going to play into practice? And we're going to get to that. So stick around. We're going to go through the market statistics.
Yeah, there hasn't been an event in the same in the industry like this since the real estate crash of 2008.
Yeah, truthfully, like this has caused more people to sit up and look around and be like, what's going on in real estate? And I guess the only other comparable would be the COVID dip, where supply went to zero and demand went through the roof. That was a big
real estate event for sure.
But this is a pretty big one. So we're going to dive into that. We're going to give you the actual facts and how does that relate to Washington County, because it's going to be different from Washington County than it is going to be Missouri, which started this whole thing out.
Freaking
right?
Missouri.
Freaking Missouri. So stay tuned. So bottom line, I'm going to give you just like my upfront thoughts on how the market is. We're in as stable of a price market as we've seen probably in a decade. Truthfully, it's like completely balanced, supply and demand, and that's because supply continues to fall and demand is naturally going to go up because you have an increasing population of people that want to move to Southern Utah. It's just increasing every day. More people want to move here, and that demand is pent up because we don't build enough, right? So supply only is changed if we build more homes or if people decide to sell.
People on Facebook say that we're building too much.
I know they are going to always say that, but cities grow. That's how they do, and they typically, cynical, by the way. They typically grow. Yeah, exactly. They typically grow, and if they're not growing, they're dying. They don't just like, we're just gonna stay where we're at for a while. It doesn't work that way. So demand is getting pent up. People are getting used to where interest rates are because they've basically flatlined. They had a dip in December, which I think I called. If we go back to the other episodes, I called that directly. I think we're going to see a small pullback here at the end of springtime, kickoff of summer, but we're probably going to get into this 7% range between high sixes and low eights through the rest of the year.
Yeah.
I don't see any change going that way.
Yeah, there'd have to be something fairly catastrophic like COVID for
like a war or something, another crazy event type thing to happen. But with inflation continuing to rage, which is much, I think the Fed's talking today, because as we're talking, it's April 4th. The Fed's going to talk again today. He's claimed that they're going to do a prime rate drop, but it's definitely not going to happen. I don't think it's going to happen today, but we'll see. and he seems hopeful that he's going to do it this year. But I don't think fundamentally that's going to change mortgage rates. We don't got Brandon here to give his thoughts on that, but this is my unsolicited. I'm not a banker. This is just my real estate perspective. I don't have a crystal ball, but I think we're going to see stability in mortgage rates. They're not going to change a whole lot in the next 12 months.
So with that being said, then what would you say to somebody who's like, we're just going to wait and see, what happens with interest rates, and if they drop, we'll hop into the market.
I think I'll point them to, we saw a significant decrease in price from April of 22 down to essentially March of last year, of 23, right? We saw a significant drop. Since then, prices have only gone up. So we pulled back and then turned around and started going back up again almost immediately. So if you're waiting for interest rates to drop, the problem is, so is everybody else. Prices are already going up. If you can't afford it, that's a separate conversation. But if you're waiting on something, so the reasons you're waiting are probably the same reasons why everybody else is waiting. The reason prices are going up isn't because demand is going down. It's because listings and the sales inventory is going down. Think about that. Less homes on the market,
supply and demand,
more buyers. You're waiting to a more buyer-friendly environment that isn't coming. If mortgage rates drop, what is that going to do to prices?
Well, everybody else that's waiting probably is going to jump back in.
Exactly. Which is going to cause multiple offers, having to pay over asking price again, right? A bunch of factors that fall into that to where you might not be able to get a house. Why wouldn't you just buy now and then refinance if the rates do drop, right? This is another thing that I'll show. On the macro, this is right here in front of you. We have the sales to original list price ratio is 98%, 98.85% over 3 months rolling. I'm sorry, this isn't the original. I wrote in here original. This is just the sales to list. So if you find a house that you like and it's listed at 500,000, you're gonna sellers are typically negotiating about 2 to 3%. Okay, the original list price ratio isn't far off that. I think it was like 97%, 96 or 97%. If you go back to Q1 of last year, it was like 92%. So Q1 of last year, buyers were negotiating all kinds because prices were coming down, and sellers were coming down and getting out negotiated and getting less than they otherwise would have in this environment. So sellers aren't negotiating right now as much as I think they could be if buyers demanded it, because demand's there even though supply is going down. Buyers should be pushing hard to negotiate down on pricing. They got to be okay to lose a house here or there, but I think they should be a little bit more particular about the house that they get in this environment.
There's no reason to jump into something.
There's no reason to jump into something. And it still is a time to where if you're waiting for something to happen, the only things that could happen is you're going to pay more money, right? Because then you're going to be negotiating a year from now to reduce the price of what you would have bought it today. I just firmly believe that, right? So as far as sellers goes, it's still a seller's market. It's balanced. We're at like 4 months of inventory. But if you look at single family residences only, just single family residences only, that's where things start to really kind of look out. So if you look at this stat right here, this is only looking at single family homes. This isn't looking at townhomes, not condos, not manufactured homes, not mobile homes. Okay. You could see active inventory has dropped from a high back in September 22, okay, October 22, September 22, to where we've dropped almost 500, just about 500 listings active on the market. So supply is falling. You can see that. And we could see the new listings that are hitting the market. If we compare it to Q1, if you're looking at the screen, we had a similar jump in inventory, but a steep decline in March, where the new listings were almost identical to Q1 of last year. Almost identical.
Parade of homes has something to do with that as far as new listings go in
Yeah,
February.
it typically, like if you look all the way back to 21, you look at 22, you look at 23, we always see a jump. But like even looking at 22, we saw listing inventory climb and then just keep climbing. But it was climbing out of that COVID dip hole, right? So we have this big old gap from essentially end of quarter one in 2020. We had this massive shakeup. This is the earthquake that happens from end of quarter one 2020 through quarter one of 22. And finally normalcy happens in October of 22. And now we're getting into this stabilized market. Okay.
So on that same note, listen to this. Sold volume year over year, so Q1 of last year compared to this year.
Don't get lost in the stats, people.
Sold volume is up 23%.
Sold volume.
Average sale price is up 12%, and the percentage of list to sell is up 2%. So it was at 96%. Just single family homes. Just single family homes. Q1 it was 96%, so you had 4% of negotiating room. Now you only have 2%.
Yeah. So what I'm trying to drive home here with buyers is that if you're a buyer, this tightening of the market, you're paying more for money for the houses. Mm-hmm. The interest rates are staying pretty stable. Mm-hmm. There's no reason to wait for a more desirable market, because it can really only get more difficult from here. Yeah. Because there's nothing to really disrupt the listing supply. The supply scenario of the economics, there's nothing to disrupt it. And the only thing that would disrupt it would be less people selling. We're not going to get this flood on the market of homes.
And if interest rate is a huge hang up for you, there's many examples of negotiating with the seller to make it so that the seller's net profit is what they need or what they want. And then also being able to buy down an interest rate to make your payment or your interest rate where you think it needs to be. So there's ways to, if you want to get into a home and it makes sense for you, it's different for everybody. But if you want to get into a home, there's ways to do it.
Yeah, I think this. If you're watching, hopefully you're watching online. If you're not watching and you're just listening, the price trends that we have in this graph is something to definitely take a look at. If you really want to see kind of a perspective as to like, hey, how have prices been going historically? This chart is from January of 2020. Okay, there's no reason to look back beyond that. We have to realize that like the new normal thing, they weren't even kidding. Like this was like a legitimate thing. Yeah. This is the new normal for now, barring some other massive event. But we're gonna stay positive from the perspective of, if all things being equal, we continue down this road. You look at the long tail of history. The prices didn't have this steep, angled hyperbolic jump, right? This is a pretty stable growth since January of 2020, right? And the fall, I'm going back to this. The fall was from March 22 on the average down to June of 23 was the bottom. Since June of 23, we've ping-ponged up the market. And in some cases, we've jumped up in the market. So in February, our average price sale was $720,000 in a single month. Okay, there's some outliers. We get some big listings that hit the market, the Parade of Homes. Mm-hmm. We tend to get some peaks in February. But the median average is still climbing across the board. The median has had basically a no change since 22. We've just ping-ponged up and down with really no change on the median. Okay, so we're not seeing massive upward pressure on pricing, but look at the angle of the active list price. Sellers are negotiating less and they're asking for more. There's a big jump here on the average list price. Mm-hmm. And if you look back in 2020, there's this big angle in 21 where the listing market are asking for more. They started getting more. And then when the market shifted, the average list price came down. But there's a steady crawl in the sold prices, right? The demand is still going to dictate what real value is. So even if the sellers are asking for a bunch, they're going to adjust because they want to move the property in a reasonable amount of time. So what I'm saying to this, in 23, what they were asking for is what you're buying today in quarter one. Quarter one of 23, they were asking these prices, getting less. Mm-hmm. Now they're asking for more, but they're getting the prices that they were asking for a year ago.
Mm-hmm. Yeah,
we're marching forward, people. We're marching forward. Mm-hmm. Inflation is going to impact everything, including housing. Mm-hmm. There's no reason to get on the fence. How's the market? We're chugging right along.
Yeah.
There's not a whole lot
I hear a lot
being disrupted.
I hear a lot too about how the upcoming election may affect the housing market, and I think I tend to lean towards that being fairly anecdotal, right? I mean, the real estate market is usually pretty slow to react, which is why you know, in like an investment portfolio, it's a pretty stable investment. It's a general, you know, generally speaking, but. You know, I guess I'll pose this question too, is it's like, well, you know, we're going to see what happens with the election. And then, you know, maybe we'll take a look at buying, right? Either number one, you know, they can't afford it, right? Mm-hmm. Or number two, you know, they're digging a little bit too much into the weeds with the real estate market in general. Anyway, I just figured I'd bring that up since it's in an election year.
I think the election year is going to have some impacts on the stock market. It's going to have some impacts on potentially people leaving areas that they're frustrated with, right? Where if somebody wins the election, they don't want to live in that area anymore, or they're seeing. But really, and I've had a couple of interviews.
Of celebrities that are supposed to move to Canada, and you know, if Trump wins, and
that because that's less restrictive there. Yeah. The thought is
makes sense.
When we talk to buyers that have moved here from all over the country, across the board, they're tired of when those elected officials are actually implementing things that are impacting their daily life. So there's a trailing thread to that. There's a long tail to that. They're typically not reacting because of one election. They're reacting to multiple decisions being made by city councils or by school boards.
Yeah, from like local stuff.
That is impacting their daily life is what's causing people to leave. And they don't just up and leave. They take time, right? Mm-hmm. And we're starting to see just a continuing growing population of people that would like to come here. Prices have priced a lot of people out from being able to come here. But that's where all I see is we're building half-acre lots with 5,000 square foot homes with pickleball courts and pools, and we're copying that and pasting it all over the county. Yeah. We have massive homes because the people who want to move here want a $2 million house. Mm-hmm. It's crazy to me to see the number of listings sold over $1 million year over year continue to go up. We're up 11% since last year from 1 million to 1.2 million. Yeah. We're up 11% in sold homes at that price point. Mm-hmm. I didn't think it was sustainable, but I also didn't realize there's so many different markets where that's the average price of a home is $1 million.
Oh yeah, you sell a house in California, that people purchased in the early '80s for $150,000, $200,000, and half a mile from the beach, and it's paid off, and they sell it for $2.5 million.
There's a funny meme where it's like it says like boomers buying a house for like a bag of beans, and he's like dancing, and now it's worth like $2 million or whatever. And he bought it.
Or that meme of that like Renaissance dressed guy looking down on everybody.
Yeah,
you know what I mean? Because boomers buying their houses, in 1980, looking down.
Or the one where it's like, I was messing around in third grade on the playground. I should have been investing.
Yeah, exactly.
Well,
that's a good one too.
So good.
We should pull that one up.
Memes are the best.
So like thinking about just a quick comparison. Q1 price per square foot for a single level home, so all in one floor. Mm-hmm. Is
$350.
$305. $305, which is up $7 since quarter 3 of last year.
Only $7.
Take quarter 4 out because there's just so low sales. So I looked at quarter 3. It's up $7 since quarter 3. So 6 months ago, $7 per square foot. People were 5,000 square feet.
Yeah.
Okay, but 2-story homes, $259 a square. I should have quizzed you. Up $5.
Yeah.
So price per square foot on 2-story home, $259. Single level home, $305. Keep that in perspective, people. Not every house is valued the same. Your neighbor's house isn't the same. As much as you think it's probably similar to yours, more than likely it's not. Mm-hmm. Every house has its own individual market, and single level versus a 2-story are different. Mm-hmm. You have diminishing returns on size.
That's an interesting point because if my house is a 2,500 square foot home, built in the 70s, and 2 doors down, there's a house that was built in 2015 that's 5,500 square feet. That's not necessarily affecting the value of my home. Maybe slightly.
Yeah, the neighborhood is kind of affecting it, right? But we're also saying when I'm doing a comparable, I'm checking that home in a similar neighborhood.
Yeah, so if that 5,500 square foot home is for sale, and I think, oh man, that's going to make my home value skyrocket. Well, it's not the same buyer, not even close to the same buyer for a 1970s home that's 2,500 square feet. It's not the same.
It also
buyer,
might affect it over a long tail, over the course of the next 10, 15
it might
years.
make the neighborhood a little bit more desirable, but
ultimately, when you're talking about if I sold my house right now, what's the value? What your neighbor sold probably doesn't impact that. Yeah. Okay, don't look at the Zillow's estimate. It's not as accurate as you might think. There might be some that it gets close and accurate, but truthfully, go pay for an appraisal. Like if you don't want to talk to a real estate agent because you're afraid of getting sold on it, go pay for an appraisal, $400. They'll appraise your house. You'll get in the wheelhouse. It'll be in the wheelhouse. It's not going to be out. It's not the bottom. It's not the top. It's going to be a general assumption that you could go to the market at that value. You could go that route if you wanted to. If you want a free one, let us know. We can give you a value analysis on the house. No obligations, no strings attached. We can kind of tell you what your house would be valued at if you were to sell it in the next 6 months. Overall, median sold price 507, median list 609. Sellers are asking more than what the market's willing to bear. We can't help ourselves. Sellers always think their house is worth more than what it is, which is okay. But you got to get realistic if you want your house to sell. You're looking at it already. What's the most expensive city? What do you think in Washington County?
What do I think?
Did you see it?
No.
Oh, he didn't see it.
No. I'm going to guess, though. The most expensive city in Washington County is Springdale.
Springdale. Probably. I did minimum 25 sales, so that you're probably right.
There's probably not 25
look
sales
at this.
in Springdale, though.
Hold on. I think I might. Oh, I didn't bring up Springdale on that one. Yeah, this one has all of the city stats.
My next guess would for sure be Ivins.
Yep, Ivins was the most expensive by a long shot, which
is hilarious.
A minimum of 25 sales.
What would you say? Maybe in the late 90s, Ivins was probably the least desirable.
Probably, yeah.
It's crazy.
It is crazy. A lot of things have factors into that, though, right? Utilities, access to water, power, things like that. But over time, you got a couple of good developers that had good vision for Ivins, and they got a lot of really nice houses out there. $942,000 is the average sold price of a house in Ivins. 49 sales on the year. It's pretty good.
So the median home price sale in Park City, this is median, not average, is $1.2 million. What's the median in Ivins?
I don't know what the median is. Less than 900.
For sure, less than yeah.
Lowest price? This was super surprising. Washington, the city of Washington had the lowest average price sale so far this year, Q1, with 244 transactions, and the average sold price being $584,000.
Yeah.
They're building some smaller. They gotta be building some smaller ones, or some of the smaller inventory stuff's moving.
Yeah.
They got a lot in the fields that are selling that are expensive, but I think majority of those are out in St. George. So in comparison, St. George's average price sale was $679, so almost $680. So over $100,000 more in St. George versus Washington, which is shocking.
It is, yeah.
Shocking. Hurricane coming in, it's $605. The average price sale in Hurricane is $605. Look at that. That's crazy. To me, that's wild. And really, when I first got into business, I was told like, hey, there's like a 10% adjustment, Hurricane versus St. George.
Not no mo.
Well, I mean, it's close. 605 versus 680. That's pretty close. 10%.
Yeah.
Right? 10% 60,000.
I guess. Based on average sold price, not median.
Based on average.
Average.
Yeah. It depends on the house.
Yeah.
But so it's 605, man. That's just wild. That's wild to me. So anyway, so those are some of those interesting facts.
What was I doing in 12th grade?
What were
I
you
should have been
doing?
buying property in
You
Hurricane.
should have been buying property.
I'm so stupid.
You should have. You're not stupid, buddy. I think you're smart.
If I was smarter, I would have been buying property when I was 11.
All right. If you're listening to this, we find the real estate market updates get like the least listenership. Most people are unengaged. Yet I hear it all the time. People are like, "Hey, Rob, how's the market?"
What's the market doing?
And then you start talking about the statistics, and they're like, I don't actually care. So we think the statistics help. If you think differently, reach out to us. Let us know. Put it in the comments. What do you think? What do you really want to know about what's going on? Do you want to just hear the Chicken Little, the world's coming to an end things or not? Let us know. Put it in the comments. Text us. 435-767-7715. Text, like, let me know. What do you guys want from the real estate
It's probably
stats episode?
People are probably uninterested in market updates. It's probably our fault. It's probably real estate agents' fault, right? If real estate agents were to say, like, if somebody asked me, hey, Jeff, how's the market doing? And I say, well, it depends. And then just let it flow.
Yeah.
Maybe that'll get more engagement. I don't know.
Yeah, I don't know. Well, we got a comprehensive breakdown here, so we can let you know exactly what the market's looking like. Interest rates are coming in right around 7% today, and that's an aggregate. If you got a great debt-to-income ratio, if you got a good credit score, you could probably get some seller credits to buy that down. You might be in the high fives. You might be.
I've got some clients that locked an interest rate in the mid fives.
There,
2 weeks ago.
2 weeks ago, mid fives. So it's not all doom and gloom. If you've got a 5 on your interest rate number today, you're golden. I mean, there's really you can't expect to get a better one than that. Prices going up. It's going to be more expensive over time goes. We don't build enough. Washington County's still the place to be. Let us know if we can help you buy or sell. Okay, we're going to take a quick break, and we'll be right back. This is what everybody was waiting for anyway, is us to talk about NAR in the lawsuit and how real estate agents are going to not make any more money. They're going to be, they're going to stop their
real estate agents.
Their racket.
They're done for.
They're done for. The whole industry is getting just decimated from this lawsuit. Too much. Billions of dollars.
I made $17 billion last year.
Me too. High five.
Crazy.
It's all about the money, people. At least that's what David Johnson thinks.
Shout out to David.
Shout out to David. Unfortunately, that is not how much money I made. I made far under the average wage in the state.
I made slightly under 17 billion.
Yeah. So the NAR, if you don't know, I'm sure you know, it's literally been on almost every single website, or every talking head has talked about how real estate is in this huge shakeup and how real estate agents have been essentially, this is honestly the vibe I get, is that real estate agents have been screwing people over for decades, and the Pied Piper is calling. Would you say that's pretty much what you hear?
Yeah.
Pretty much.
Pretty much, yeah. I mean,
I was thinking about having like a stream of like individual talking heads telling all these incorrect facts about what this means for the industry.
Yeah.
But we want to set the record as far as we understand it as real estate agents, what has actually changed, what has the lawsuit actually done, and then how is that going to impact, truthfully, the only person that matters, which is the consumer, right? The end user, the buyers and the sellers in the market. How is this lawsuit going to impact them? I'm looking at the article you sent us. It's from the Real Deal Real Estate News. I don't know if they're the real deal, but they do quite a bit of real estate related news articles.
Yeah,
this is their winners.
It's a fairly prominent, like, real estate reporting.
Yeah, but this is like an example of it. The winners. First one, NAR. I mean, I can't imagine, even for whatever even they say, I can't imagine that NAR just got settled on a $418 million settlement and the NAR is the one winning. Doesn't sound like it. Home sellers and buyers. Also, nothing about this settlement is to me a win. Just my own unvarnished opinion on this. Obviously, it's biased. I don't think home sellers and buyers are winners out of this deal. The sellers that sued the NAR, they're going to win on this one.
It depends on the state you're in too, as far as the home buyers and sellers go. Some states they might be a winner, and some states it might be a complete disaster, depending on how they operated beforehand.
That's going to say depending on your gravestone. Depending on your
gravestone.
Depending. It's depending. There's so many factors that are involved in this.
It depends.
It depends. Compass, Redfin, and Zillow. First of all, I don't think Zillow's a winner out of this, or Redfin. Technology companies, there might be some argument that this is going to help technology companies, but the only reason these technology companies exist is because real estate agents allow them to exist, truthfully.
Yep.
Because if I take a listing, I put it on that website, that's how they get viewership.
I'm allowing it to be on the website.
I'm allowing it to be on the website. It's helpful, but if a buyer wants a house in Washington County, they could just come to my website. They don't have to go to Redfin and Zillow. Do they have the captive eyeballs? They do unless they didn't, because then in which case it would just go somewhere else, right? It's not like they create anything. Redfin and Zillow create nothing. If anything, Redfin and Zillow are actually probably the ones who drive up prices more than anybody else, because real estate agents have to pay these companies for the leads. So they only benefit from the movement of real estate, and they get paid for by the real estate agents that put their listings on there. So if you're a real estate agent listening to this, that's the biggest, we're losing because Zillow and Redfin are just taking advantage of the relationships and the things that we built on that side. There's no competitive advantage that Redfin or Zillow. So the fact that they've listed Redfin and Zillow as a winner out of this thing, I also
makes no sense.
Have no idea.
That's funny though.
Understand.
Scroll back up a little bit. Real estate influencers ready to explain this new big world.
Oh my
Hilarious.
gosh. Yeah,
Hilarious.
I'm a winner because I have to explain this thing to 7 million people that are confused.
And I'm gonna get clicks and likes and be able to do this.
I don't think I'm going to win at all. But that is pretty funny that they put in there Ricky Carruth. Tom Ferry and Ricky Carruth are among the few that they've had town hall style discussions of what it means for brokers, not what it means for the consumer, but they're doing it for the brokers. I've seen more ads about how like real estate agents, let me show you how to adjust in this shifting landscape, because it isn't going to impact the consumer the way the consumer thinks it is.
Yep.
So correct me if I'm wrong. The original case, the Brian Stitzer, right? The Stitzer Burnett. I'm sorry.
Stitzer
Burnett. Is that a
shout out to Brian Burnett?
Brian Burnett, Brian Stitzer, Brian Seltzer's Orchestra. I'm messing all kinds of stuff up.
Yeah.
So it's the Stitzer Burnett.
Underrated band, by the way.
Yeah, I love them. Yeah. I'm a big fan. The Stitzer Burnett case is a Missouri case where the sellers of homes sued the brokerages of the buyer agents that brought buyers to them. These are the two parties. The plaintiff is the seller of the home, represented by a bunch of corporate attorneys. The defendants are the brokerages who, the brokers who are in agreement with the agents that brought buyers to buy these people's homes, right? So the seller is suing the buyer agent.
Because why?
Because they think their argument is that they paid more in commission than they should have, or that they were forced to pay that commission.
Because in Missouri, it was not disclosed up front.
Correct.
That's where the commission was going.
Correct. But what was disclosed?
The total commission.
Total commission. So I'm a listing agent. I come in, say, Rob, I need you to sell my house. Great. These are the things I'm going to do. Okay. How much are you going to charge me? It's a 6% commission. Okay, great. Sell my house. Maybe it's a 5%. In Missouri, it was basically 6% across the board. So they don't have a case here. But we sat down with the seller. They said, this is the price of your house. This is as much as I'm going to take as a commission. Rob, just get it done. For the 6%, you better get it done. So they take that 6% and they say, hey, buyer agents, I'm going to pay you 3% to help me. So the seller already has an agreement with the listing agent for 6%, which is clear. It's clear in the contract. They sign it. Yeah. It's 6%.
Yeah. The sellers agreed to it.
Rob takes the 6% as the listing agent and says, hey, buyer agents, I'm going to pay you 3% if you help me sell this thing. And we do it together. I'll take 3%, you take 3%. In some cases,
bring me a ready, willing, and able buyer.
Yeah, so people you already know that's good, that's pre-qualified, so they're not wasting their time. We're not gonna go run around the track with some low baller or investor that's gonna string us out that understands the process. That's gonna do a good job. In 30 days, we're gonna be able to get this closed. I do that. I issue, instead of taking a full 6, I give 3 to somebody else. Then now the seller's like, I sold my house, but I'm not happy about it. Because I looked at the settlement statement, there's all this money going out, and I don't like the fact that that buyer agent made so much money.
I'm not paying the buyer's agent, I'm paying the listing agent.
Exactly.
I never agreed to pay the buyer's agent.
Exactly. So there's confusion. No, you're not going to find an argument with me on this. I'm not going to argue the fact that they should have been clear where that money was going and what they were paying it for. However, they were clear as to they were willing to pay X amount of dollars, and however that agent got the job done seems to me like it's up to that agent, right? Antitrust is another element to this that I think is important. What they're saying is that there's that
the seller was essentially being forced into selling it for 6%, that there was no negotiating on the front end.
Exactly. Which, in my mind, that's looking at all the years that I've had in dealing with real estate agents, so I'm on 8 years, 3 years of which ran a brokerage of just real estate agents, 160 agents in our brokerage. They're cats. Like getting them to collectively do anything is damn near impossible, right? You're always going to have that one person or that group of them that do not want to do what you're asking them to do or have zero interest in towing the line. That is definitely not a real estate agent trait from my experience. Now in Missouri, maybe it was a very collaborative effort.
Yeah.
But looking at the case, I don't think they did a very good job showing that there was some, collective antitrust that was forcing these consumers to do it. It's an industry standard that's been around for a long time. Should it change? You're going to hear from me. I do think it should change. I think it's important that it changes. However, is it going to change because of this settlement? Not a chance. Not a chance. That's not what this settlement did. So they win the case, billions of dollars. I think it was over $1 billion, right?
Yeah. There's only two things that
So the Stitzer-Burnett case, they win that case in Missouri, which then sets off a chain of events across the country.
Yeah. So that leads us to where we're at now with the settlement.
Yeah. So that one, so that really kind of started this whole thing out. So then now NAR was sued essentially along the same lines, and they're settling. They're going to raise up their hand. So here's the fact sheet. Okay. Here's the fact sheet on what it is. Basically, it's all brokerages with an NAR member as principal that had a residential transaction volume in 2022 of $2 billion or below, the settlement is subject to court approval. Okay. So if it's over $2 billion, this applies to them. Okay. So, what does that mean? So over 1 million real estate agents are released from liability nationwide. Okay. So they're assuming liability for all these NAR members across the country. Okay. Over 1 million of them. The specifics as to all those little details of how they're settling and who's going to get charged for what, that for the consumer. If you're listening to this and you're a read estate agent, you're going to have to go read the fact sheet yourself.
Yeah. So one of the keys with that is that brokerages that decide to not enter into the settlement they're opening themselves up to future litigation, right? So an example would be like EXP. If they decided to not enter into the settlement, they would owe $367 million, which is just under 3 times the company's cash on hand. They'd be done for.
Yeah, it's an overwhelming loss for them for sure. So it goes in, settles implications for the MLS, for what the NAR is, but all these releases for what the settlement is, right? And what the specifics are for why and how this impacts them. But the practice changes. Like, what is this actually going to change? We are able to retain the right of consumers to continue to have a cooperative compensation as an option so long as they pursue it off the MLS through negotiation and consultation with real estate professionals. Let's back up. Just a couple of years ago, Zillow wouldn't put the buyer agent commission being offered on their site. The brokerages and the MLS rules required them to put that if they were going to be a board member and part of the MLS, which is what they are, they were required to put it on their websites, what the buyer agent cooperation commission was. What that did for the consumer is give them clarity as to how much commission is being offered the buying agent. If in Missouri you listed a house, you look it up on the internet, it would say on Zillow what the buyer agent commission is being offered.
For quite some time too.
You're right. So that has already changed. What this is saying now is that it just has to be off the MLS. So now, instead of having complete transparency and everybody seeing what that buyer agent commission is, now no one can see it. No one can see it.
And
unless I specifically tell
it, right? So
unless I offer it up as a listing, if I'm the listing agent, I can't put it on the MLS.
Yeah.
It can't be there. I could put it on my own website. I could put it in an email. I could put it in a text message. I could say it verbally. I could put it on a flyer, but I can't put it on the MLS. I don't understand how that helps anybody.
Well, what it does is it lowers the level of transparency for the consumer until they see their settlement statement when they go to close, when it's already too late to do anything with the contract.
Well, the argument could be, well, why doesn't the buyer just ask?
Mm-hmm.
Why doesn't the consumer just ask?
Mm-hmm.
Which they could. Who are they going to ask? If it's the listing agent, if they go directly to the listing agent, is the listing agent required to tell unrepresented or an unrepresented, not a realtor, no one in their board, an unlicensed individual, are we required to tell them what that buyer agent compensation is?
It's a big word.
They're not required.
No, they are not.
They're not required. They might.
And theoretically, a buyer's agent, I mean, it could be in the dark until the settlement statement's released, right? I mean, as a buyer's agent, you might not know what you're going to make, if anything.
Exactly. So
through their whole transaction.
Exactly. So because of this is the practice change is what they're saying. Yeah. The second piece, the NAR has agreed to put in place a new rule prohibiting offers of compensation on the MLS. Change will go into effect mid-July 2024.
So then what's the point of the MLS?
Hey, what else? What else does it do? Not a lot. NAR has long encouraged its members. This is it. Long encouraged its members to use written agreements because they help consumers understand exactly what services value will be provided. They're not required to do it in the past. Most boards across the state or across the country do require that they have that. Mm-hmm. The NAR doesn't require it because it's a national association of realtors and every state is going to have their own rules. So they give it to the boards, the local boards. In the state of Utah, we've disclosed the buyer agent commission for the better part of the last 3-4 years, maybe.
I think when was that form updated? 2018 or 2021? I'll have to look, but yeah.
Maybe 2018. Yeah. That's probably right. 2018. Yeah. It was updated where it specifically says on the listing agreement what the commission is. It's been a part of my listing agreement ever since, truthfully, I've been in this business. I've always had the conversation. We're going to offer X amount to the buyer agent and our commission side on the listing side is going to be X amount, right? It's the clarity of the negotiation. I've been doing it and we've been doing it in Utah for the better part of probably the last 6 or 7 years, right? Yeah. So this doesn't change anything for Utah. But at this case, so now they're saying you need new written agreements. So now the buyer goes to a buyer agent and says, hey, will you help me find a house? Or I need you to help me buy a house. Because it's not just help me find a house. Most of the time they can find it themselves. I need you to help me buy the house. Once I find the house, what do I do next?
Yeah, so this is an article, an opinion piece written and published in USA Today. And I think this is relevant because what she says here is she says, so a buyer representation agreement is now required before a property showing, right? That's what we're talking about. So for example, she says, and this is very, very similar to what Rob and I do as well. It says, for example, I usually complete a buyer consultation and 1 or 2 property tours before requiring a buyer's agreement. I do this to be sure we're a good match for each other. A successful client agent squad requires a lot of trust and a lot of common communication style. Take the tours off the table and I think things get awkward. Now I spend 1 hour with a potential buyer and then prompt, so do you trust me to guide you through your biggest life purchase? Sign here. I agree with that completely.
Elaborate.
So I guess there's ways around it, but if you're saying, okay, realtors are no longer allowed to show any sort of property without a written buyer agreement, you're saying that I can't, I can't walk with and talk with my clients before making them sign an agreement before showing a home, right?
Right.
But on the flip side of that, it also, I think, increases the accountability for real estate agents and gives an opportunity for people to really sit down with and get to know in a short period of time what value their agent brings.
So I think to this point, I think it's a great point, is that it's going to force buyer agents that solely help buyers. Because in this industry, if you don't know, there's listing agents and there's buyer agents. Some agents do both. Some agents do one or the other. Yeah. The vast majority as a percentage will only really ever help a buyer a buyer find a home. The listing side is something outside of their wheelhouse. Looking at the average transactions across Washington County, the average number of transactions is 4 transactions a year, and overwhelmingly, the ones that close 4 transactions are they're only helping buyers. They're rarely listing a home. They might list one, but it's probably their own house. It might not be an actual other person's house, right? So the buyer agent on a professionalism level has always been the bar has been set lower because the requirement of that person has never been to sit down and go through like an actual consultation and show value in saying, hey, I'm going to charge you money to have me work for you, right? Where a listing agent has to tell the seller, I need you to pay me money, and these are the things I'm going to do to
You're interviewing for a job.
Interviewing for a job, right? Yeah. So the buyer agents haven't had to do that in the past. So I think this is the best thing that's going to come out of this is it's going to push agents to raise the bar of professionalism and set the expectations with their buyers early on. Yeah. Okay. And this is the only reason, because by removing clear cooperation, they don't know if they're going to get paid on a house or not. They don't know. So they have to show value. They have to show their value. So the best thing that's coming out of this, if I was to settle in with honing in on exactly what the value and who the winner is going to be the buyer, people that are buying homes, the buyer person individually. Ironically, because the sellers sued the buyer agents, the buyers are going to get better professionals in the industry. Yeah. Is it really going to lower? Do you think it's really going to lower the commission? Like on the macro, is this one effect going to lower commission?
Probably not.
Probably not. What is lowering commissions?
Well, I guess it depends on how you slice the pie, right? I mean, are listing agents going to make more money now? Are buyer agents going to be able to charge differently, right? I mean, some of the things we've talked about is, on the buyer side, it turning more into maybe how lawyers bill their time, right? Ultimately, though, I don't think real estate commissions overall will be forced down.
I think the listing agents,
they probably should be,
are going to adapt. They're going to offer less to the buyer agents because it's going to require them to put on their offers, hey, this is the commission that I'm seeking with this offer. Yeah. And it's going to force them to have that conversation. But the listing agent is going to take the same commission because they're still working the same. Nothing's changing. They're still working the same, right? And so if I know as a buyer agent that this agent typically negotiates 3% for a commission, I might actually work a little bit harder to bring them a great offer because I know they historically do that. But at the same time, if the listing agent wants to offer less to the buyer agent and net their seller more, the seller wants to pocket that money. The seller is the one who wants the money, right? If you're a for sale by owner and you're listing your house in order to pay less fees on your own, and a buyer comes also unrepresented, you're both taking that commission and trying to split it, right? So who wins in that scenario? Right? You might as well just both had a real estate agent and you would have both gotten fiduciary duty, and your negotiating tactic probably would have made you more money depending on who it was. Right. So ultimately, in my mind, the listing and the sellers are probably going to net more money down the road, and commissions are going to come down. In my mind, I think they're going to continue to come down, but they were already on that trend anyway. Right. Because of the access to the houses, right? The ability for technology and for people to see the homes, a big value in a real estate agent on the buying side was access to the inventory.
Yeah, buyers agents don't find homes for home buyers anymore.
Right, exactly. For the most part. What I really think is happening here, though, is that it's going to cause a huge confusion in the market as to who's paying for what in that early negotiating stage. It's a lot like commercial real estate. But what ends up happening a lot of times with commercial real estate on the commercial agent side or the commercial real estate side is that buyers go in unrepresented. They just go straight to the listing agent, and now they don't have anybody. There's
no third party representation.
Exactly.
I think about it like going back to the lawyer comparison, is it's almost like a plaintiff and a defendant trying to argue and negotiate themselves with no representation at all on either side. I feel like that's not a good thing, and it would hardly ever work out in in the favor of a win-win for both, right? So when you've got third-party representation, it's usually in your favor.
Yeah. I honestly see there being quite a bit of value in having independent representation, having somebody who does this for a living representing you. I see value in that. I see a problem with driving traffic of the buyers not getting representation and having them goes directly to the sellers because they think they're going to be saving money by not having a buyer agent. The seller's going to keep that money. I don't think that's what's going to actually happen. They think it's going to, but it's not. The seller's going to just keep that money. The listing agent's going to get paid, and they're going to negotiate against the buyer.
I guess technically the seller is keeping the money, but when you look at the value that an agent can bring, if you're paying an agent 6% and an agent can get you an extra 15%, you're pocketing 9% that you wouldn't have had in your pocket.
Yeah.
And I think, it's a little bit of a misconception, I guess.
What do you think some of these other articles that you had pulled up, what were some of the other, there was one that sticks out in my head of I keep hearing this over and over, and which is couldn't be more from the truth. So negotiations being more complex. I completely agree with that.
Yeah, we kind of talked about that a little bit earlier. Buyers, I mean, if you think about a buyer having to pay an agent out of their own pocket, there's going to have to be some real value there for a buyer to want to do that.
Yeah, I think ultimately the buyers aren't going to be paying out of their pocket. Yeah. It's not like they're going to be paying, whether it's a flat fee or a percentage anyway, it's still going to come from the seller. It's still going to come from the seller because...
One of the things that article brings up, the NerdWallet article, says that hopefully they'd negotiate the buyer agent compensation and then that would just be included in the mortgage loan. So that, that's a little bit of an interesting argument.
But isn't that already the case?
It's already the case.
It doesn't change anything.
Yeah, because if you're selling a home for $500,000 and you get the commission's already included in that price.
At the top line price.
They're already getting a loan for it.
They're already getting a loan. They're getting a loan for that based off the appraisal and the value of the home. So the real estate commissions are factoring in indirectly into the appraisals. So this is where I think things start to really get off the rails, is that without clarity on the commissions, and we're talking about 6%, as a total value of the home, is commissions going to be factored into appraisals moving forward? Nobody's addressed that. Yeah. No one's addressed that at all. Yeah. Which I think is going to throw another wrench into it. I had a buyer ask me, he's like, hey, if I wait till after July, do I not have to pay you? And I think he was joking. And also, I don't think he was joking. I think he was thinking like, oh, could I get you to work for free for me? I'm like,
every joke, there is some truth.
There's some truth. It's just not going to be the case, right? And it makes the most sense that the seller pays the commission because they are trying to sell their house. They want to sell their house, right? They're paying a commission to a listing agent. The listing agent is going to see value at some percentage or some dollar figure in including the buyer agent pool of people out in the market to bring them buyers. Will pay you if you help me do this. They're always going to see that. So no matter what, in that negotiating time frame or that percentage, we're going to factor into kind of where Utah's been for the last 5 years, is that it bounces. The average commission is about 2.5% aside. So it's about 5% of the average commission. And we've come down from a high of 7% in the late 90s, was the average commission total was 7%. So we've come down to 5. Gary Keller has famously said he sees the commission across the board going as far down as 3% total, right? But he said that before this settlement even occurred. The settlement didn't change that. The settlement didn't change that. What's changed that is technology, the savviness of the general public in understanding the real estate transaction. We all know that it's a pretty simple thing.
Access to information.
Access to information. It's not what you know, it's who you know. The value in your real estate agent is who they know and what is their knowledge in the market. Going back to the first part of this episode is, having somebody that understands the market and where values are and getting guidance and a true fiduciary to you along the transaction, that has value. It's always going to have value. The total value of that, I think, is going to be... It's going to be a moving target. But this settlement doesn't change that. Yeah. This settlement doesn't do anything. This settlement, in my mind, does anything but just confuse the situation. Ultimately, I think it is a benefit to the consumer in a long tail, but in the short tail could have some unintended consequences where buyers go unrepresented. That's in a nutshell what I think is going to be the most.
Yeah, where legal fiduciary duty is non-existent.
Right. Because they think, oh, well, the buyer agent isn't going to get paid, or I'm going to try to save that commission and just go direct. But they don't even know what commission is being offered. So it ends up making the negotiation pretty difficult. Yeah. So one of the things I heard is that sellers are no longer going to be allowed to pay the buyer agent commission. That is not true. That's not true. Ultimately, the listing, if you want to sell your house, you're going to hire a listing agent. They're going to do it for a certain percentage. Either they're going to do it or not, or you're going to do it as a for sale by owner. I know the statistics are that for sale by owners get about 15% less for their house, if not more. In some studies, it even has more than that.
Yeah, I've seen 20%.
Which is tough because there's a lot of different factors as to why are they selling as for sale by owner, right? They might be in a situation where they can't pay for an agent. They just don't have enough equity.
How are they collecting the data?
Exactly.
So, yeah.
But overall, in general, a for sale by owner typically nets less than they would have if they would have just listed with an agent. The agent's going to do a good job. If you get the right one, they're going to do a good job and get you more money net in your pocket than you otherwise would. I still believe that. Obviously, I'm biased. You're listening to a real estate agent talk about this whole thing, but like this is the headlines are National Association of Realtors agrees to slash commissions. That is not the case. That is not what's happening, everybody. That is not what's happening. All they're doing is saying, hey, we used to tell everybody what a buyer agent commission was. Now it's a secret for everybody. And so now it's the value of a negotiation and hiring an agent that knows how to negotiate has gone up. Right? Yeah. What else? What else do we need to cover on this thing?
Man, we could probably
I get passionate about this thing.
We could probably just keep going, But I think that probably covers most of it. Yeah.
Okay. Well, here's
the bottom line.
What's the bottom line?
The bottom line is the fallout from this settlement. Nobody knows what's going to happen. There's a lot of confusion as to the short term on what's going to happen, for example, between now and July 1st, and then immediately, the 3 to 6, 9 months after July 1st. Nobody really knows exactly what's going to happen. The real estate industry is usually kind of a lagging tail trend of the rest of the market in general. So it's going to take a while to shake out. And I think the bottom line is being able to show value as a real estate, true value on a complicated transaction.
Yeah. If I'm going to do my bottom line. If I want to buy a house, agree to sit down with a buyer agent and say, how are you going to get paid? Yep. I want clarity on how you're going to get paid right now. I want to make sure that we understand this right out of the gate. Yep. Before I put you to work, before I do anything, how are you going to get paid? If I'm a seller, sit down. When you go through the commission conversation, get real clarity, which they're going to do anyway. Get clarity on what are you offering a buyer agent? What are you offering as a seller agent? And it's probably going to be variable. I would suggest if I'm a seller out there is approach the conversation of what does a variable rate commission look like for you? Because the listing agent should have a menu of options, as you and I have discussed multiple times, is that depending on the seller, depending on their situation and how we're going to be offering up that property, because lots of properties, right? We have a new listing that just hit the market in Ivins. It's a mobile home, cash only sale at the foot of Red Mountain. It's a beautiful house. That house is going to need a different commission structure than a house that's in Little Valley that's $1.5 million. Okay? It needs a different commission structure. So have that conversation with listing agents. We'd love to interview for the job, but make sure on the buy side, sit down with your buyer agent, ask them how they're going to get paid. Make sure they understand what that road is going to look like. If you're going to list with an agent, when you list with an agent, if you're going to list with an agent, have them walk you through what their variable rate commission looks like, because that's ultimately what's going to happen starting in July. So we hope you get some value out of that, guys. Other than that, enjoyed that episode. We hope you enjoyed this episode. I know it's real estate stats and real estate conversations, and a lot of people think that's boring. So if you tuned into the whole thing, thanks for sticking with us. We're going to be back next week, probably talking more politics and businesses here in Southern Utah. For now, Jazzy Jeff, We'll see you later, man.
Bye.
Bye.